Hi there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I'm here to bring you trading levels and some popular company symbols for the week that's just starting on July 22nd, 2024. Before I begin, the usual disclaimer, Precision Trading Labs, we are neither money managers nor financial advisors, and everything that we present is for information and educational purposes only. So let's take a look at the Apple here. We're actually looking at a 2-hour chart of Apple. We could just as easily be looking at a daily chart, but oftentimes I like to look at the 2-hour because it kind of just gives us a little more detail in terms of candle structure. And so right here, we're sitting right now at around the 227 mark here, and I have two levels marked out here, above and below current price here. And we actually more or less are kind of sitting close to midway in between here. So above here, we have a region here at around 234 and change. And then this one is down here at around 220 and change. And of course, each of them have a certain depth to them. And so the story with these is that right over here, and if I blow this up here just a little, if you notice right here, price came up here and then it consolidated over the course of a day, and then it came out with a very, very bullish candle there, and then there was a gap, a minor gap, and then obviously that very, very, very big candle there. And so this in here, the lead into that uh, was basically an area of consolidation, which we refer to as a base. And if we think of the shares that were acquired by willing buyers in here, we can think of that as demand. Okay. And then in terms of the shares that are offered up by sellers, we can think of that as supply, the supply of shares. And so within here, supply and demand are in balance. Or to use a 50-cent word, it's an equilibrium. Okay. And then so within here, supply and demand are in balance. And then right here, no one was willing to sell anymore, and so that's how these big green candles got formed. So right here, this represents an exhaustion of sellers, okay, because no one is willing to sell anymore. And so right here, where supply and demand were in balance, it now goes out of balance. And so what's left in its wake after supply and demand were balanced, and then once price rockets out of it, there is no longer any supply here. It's only demand. Consequently, we call this here a demand zone. Okay, and the foundation about trade when there's a demand zone, okay, and particularly when there's a demand zone, and one of the things that makes a demand zone quality is that price does not spend very long in there, and so when price returns there, there is often residual buying pressure that's waiting to be tapped there. Okay, sometimes there are literally unfilled orders there, but more often than not, it's simply an area where buyers started to buy and then price left suddenly, and so as a result, when price returns there, there is oftentimes another round of buying. And so this is where we would express a bullish trade on Apple at around 220 if we get a pullback there. Okay. So we could say that's only about $6 above where we are now. And the way we would express a bullish trade there would be, of course, the most direct way, of course, would be to simply buy the stock. But another thing one could do, of course, would be to buy a call, or if one was a fan of collecting premium, one could, of course, also sell a bull put vertical credit spread, and then one could collect premium on a pullback there. So, but those would all three be ways to express a bullish trade at the front door of that demand zone here. And the way we would also structure the trade in terms of risk management is we would basically right here, this would be our entry at around 220, 25 or so. And then what we would do is we would place our stop just a bit behind the back line of that demand zone. And so it would probably give it about 50 cents wiggle room there. So pretty much where it's sitting right now at around 218 and a quarter. And so this is essentially what our trade would look like. So if it got up to there, that would be a 1-to-1 trade. Up there would be a 2-to-1 trade. And then up there, of course, would be a 3-to-1 trade. And so that's one of the ways that we manage our risk, and also where we can have a trading plan that actually allows us to approach a specific financial goal by using levels that have a high probability of being able to deliver multiples on our unit of risk. So if this is one unit of risk here, generally we want to basically be getting anywhere at least 2 to 1 on our trades, if not 3 to 1. So that's the way we're constructing our trades there. So right there's our demand zone here, and then of course up here, here's a supply zone, and that's of course the direct opposite narrative of what I said here. This represents an exhaustion of buyers here. Okay, right here, supply and demand were in balance. Right there, it goes out of balance. Oh, with a great deal of energy. Obviously, that's a huge gap, a little bit of a pause, and then that second real big thump down. So right there, that's an area of supply. And then so that would be where we would express a bearish trade. And so right here, what we can do, of course, would be to short the stock, buy a put, or in the case of collecting credit, one could sell a bear call vertical credit spread. And that would be an area of and so those would all be ways of expressing a bearish trade on Apple. So that supply zone is sitting at around 234, about $8 above where we are now, and then that demand zone is sitting about $6 below current price. So that's the story with Apple. If we take a look at Microsoft, so right here, here's an area where we're actually sitting here, and we've actually kind of drilled into, and this is kind of a weak supply zone here, but technically it is this is an area where prices turned here. Suddenly there was that exhaustion of sellers here, and if we actually look at that in the context of a 1 hour chart, we can then very clearly see right there, price came up, consolidated there. You can see those two indecisive green candles, and then it just thumps out of there. But I really would not be racing to short out of that region here. On the other hand, if we get up to about the 453 region, then in fact that actually starts to look more interesting here. And in fact, if I go to the daily chart here, we could then see. Let me just move that over here a little. So here's where we are now. Okay, and if we go up here, we can then very clearly see price drop there. Notice those two spinning top indecisive candles that where there's basically almost all wick and very little body, and then notice that much larger red candle there, and then that continued thump down there. So this is where I think an area where this would be the area where we would be looking to express a bearish trade above here. Okay, so that's the story with Microsoft. So where we are with respect to current price, that's about 2% above where we are now. And then again, I don't think this is really a great zone. In fact, I'm just going to kind of eliminate that here, get that out of the way here. And so where we would then be looking to express a bullish trade would be right down here. Okay, so right, and we could very clearly see that in the 2 hour chart here. So right here, we refer to this formation here, and let me just move that over here a little. So we refer to this formation here as a rally base rally. Okay, notice price comes up, consolidates, and then notice right there you have that exhaustion of sellers that I mentioned before. And so this is again where we would express a bullish trade. Okay, so that's where we are on Microsoft there. If we take a look at NVIDIA kind of reached a high, and then for the last few days has then kind of sank from there. So now we're sitting right down here. So in terms of a potential trading level on that, we would basically be looking to approach that level here or this level down below here. Okay, so that's actually a long way down here. If you might be looking over here and go, well, maybe I would be buying here, and one could do that, but this is actually, in our opinion, a weak level. This is more of what we would consider to be it's really support, but it's not fresh demand. Okay, and for us, fresh demand is really where we want to be trading. You can see prices come down here, and multiple times there's been multiple incursions here. And so when price returns here again, it's quite likely that really all of the demand in this region has been exhausted, because price has been back here already once, twice, three times, four times, five times already. It's highly unlikely that there is still demand that's waiting to be tapped there, and that's why we say, even though it looks like there's a level there, it's probably a used up level. One could, of course, if one is looking to express a bearish trade, one could keep an eye on here. That is certainly an area where it's a fresh level here, but kind of price, kind of just dropped out of there, and really it was one and done, and it hasn't really gone any further. So when price returns back here, one could look to short this, but on the same token, one would want to make sure that price is reversing out of here, because otherwise I would expect that this would be really the prime area where price would be going to. Okay, but at any rate, that's the story with NVIDIA. So this kind of speculative level here, that's sitting at around 120, 125. And so that's about 2% above where we are now. And then of course this better quality level, that's sitting about 3% above what we were just looking at, and that's about 5% away from where current price is now. Okay, so that's the story with NVIDIA. We take a look at Meta. So here we are. Price is actually has gapped today. You can see it's up about 2.5% here. So we are heading towards this daily demand zone here. And in fact, if I change this to the daily chart here, so we can see right here, price thumped down there. Then notice these, okay, that was obviously a major gap to get there. So then we have these two indecisive, very wicky candles, and then price obviously then thumped out of there. We had a bearish candle there, a gap, and then another very, very bearish candle there. So now you can see price is kind of getting ready to knock on the door of this supply zone. Okay, so this is how we would structure that trade. Here would be our entry at around 496. Okay, and then we would give this thing, based on its ATR, we would probably give this an extra $1 of wiggle room up here. So this is about a $13 zone. So this would certainly be something. While we could certainly express that by shorting the stock, we would much prefer the leverage of using options for that. But regardless of what option strategy, or at least for most of the option strategies that we would use, we would base the entry point on this supply zone there. Okay, so that's where we would express a bearish trade on Meta. And then in terms of a bullish trade, really there's no quality. There's really not a quality demand zone until down here, and that's a fair distance down. That's about 10% below here. Over here we do have what we can think of as support. Okay, but again, as I said earlier, for the other chart, this is really an area where I would, where it's a lower probability trade. Right here, this is fresh demand. That's a higher probability trade. All right, so that's the story with Meta. We'll take a look at Netflix here. Okay, and so now you can see this is an area, and I was really hesitant about this at the end of last week. And I didn't really want to get into a trade on this on Friday, but this was an area of demand here. Price, that's a drop, a base, and a rally there. Price kind of came back here, kind of kissed the front of it, but then really no significant demand got chewed up. And then on Friday though, it kind of thumped in there, and so I did not think it was wise to just go into this. We can see at least today it is trying to bounce out of there, but I think the quality zone on Netflix here is really going to be down here. So really what I'll be hoping for is for this thing to collapse and then to actually just get into a trade, to express a bullish trade here. And that's about for where we are now. That's about what is that? That's about 4.5% from where we are. So right now we're sitting at 643. We would need to get down to about 615, and that's where we would express a bullish trade down there. And lastly, we'll wrap up with our buddy Elon and Tesla. And so here's where we are now. We're sitting at around what 250 or so, and so in terms of a quality demand zone, this is the area right here. If I change this to the 2-hour chart, we can then clearly see price rallied, consolidated right there, and then notice then the immediate exhaustion of sellers here as we had that very bullish candle and then a gap, and then it kind of ran from there. So this would be an area where we would look to express a bullish trade. Okay, so right here, that's you'd need about a $20 pullback there. But I think that's the quality level sitting at around 230 or so. Right here, you do have an area of, this would be support, but it's not demand right here. So that this is not fresh demand here, but this would be what we would consider to be support. But you can see price came in here, it jumped, but it really, it's only, it really hasn't shown anything yet. It's just a local jump here, as opposed to here where it jumped and then you could see it very clearly rocketed up from there. So this is really this would probably be an area where one could perhaps execute a quick day trade if you get a pullback here, but this is really not an area that I'd be looking to do any kind of swing trade or really even an options trade there. So that's a story with Tesla below. Again, the quality level here is probably here. On the daily chart. And then, of course, right here, you do have a little area of consolidation right there. And that's another little local area of demand there. So that's sitting at around what is that? That's about 213 or so. Okay. So those are your areas for Tesla. So at any rate, that's what I got. This is Mitch Firestone with Precision Trading Labs. Thanks for the privilege of your time, and I will see you next time. Take care. Bye-bye.